So you might be wondering, what the heck is this balance sheet thing? What are the categories on there? I really don't understand it, and I don't want to feel like an idiot when I'm talking with my bookkeeper or my accountant. Well, you are in the right place. Today we're going to dive deep on what's happening with your balance sheet and help you understand it at the level a CFO would. So today we've got some special stuff for you. First, we're going to go deep on the 3 different categories within a balance sheet so that you feel like you can master it at a glance. Next, we're going to help you make sense of what many people feel like is the most complicated financial document they get, the balance sheet. We're going to make it so simple that your 5-year-old could read it. Then I'm going to show you how to catch mistakes that your bookkeeper might be making. Yes, for as much as we all love bookkeepers, they are human, they do make mistakes, and it's really easy to make mistakes on a balance sheet. And the problem is they get carried through over time, so we're going to help you catch those mistakes very quickly. Next, we're going to help you catch the mistakes your bookkeeper might be making that could be costing you thousands of dollars every year. We've got a simple checklist for how to make sure you avoid those. Finally, I'm going to tell you the story of a business owner who saved literally thousands of dollars in taxes by catching one big mistake on his balance sheet that you might be making right now. All right, so the reason this stuff is so near and dear to my heart is because I see so many business owners not understanding this piece, and as a result, either paying too much in taxes, making wrong decisions in their business because they don't know how to read this thing, or just feeling completely confused with no clue where to start as they look at their balance sheet. A lot of people, when they're looking at a profit and loss statement, feel like, okay, yeah, this one makes sense to me. It kind of reads through like a book and it makes sense at the bottom. But then we get to this whole balance sheet thing and you look at it and you're like, I've got no clue what I'm looking at, and I don't know what should be on here or what shouldn't be on here. And unfortunately, your bookkeeper probably isn't going to sit down with you and walk through it step by step and explain this stuff to you. Your accountant certainly isn't going to, even though they're using it to help you make very important tax decisions. That's why we're here at CEO Finance Academy. So we had this client that came to us and we were looking over his books and specifically at his balance sheet. And I said, hey, let's figure out how much debt you've got in the business. And as we started going through his debt, he was listing off all of these different loans that he had. And I said, hey, let's go look at your balance sheet. I don't see those on there. And he started looking and he said, oh no, these are all wrong. This is completely wrong. Why? He actually started getting pretty frustrated at his bookkeeper. And I said, well, did you ever tell your bookkeeper that you got those loans? And he said, no, I just kind of figured they'd catch that. And in reality, your bookkeeper is probably an amazing human, a great individual, but they can't read your mind. As the business owner, it is your responsibility to tell the bookkeeper when you get a new loan because they're not going to know otherwise. And so we found a gigantic list of loans from cars to equipment to lines of credit that he had gotten that the bookkeeper had no clue about. And we made this gigantic list. It was something like 10 or more of these that we had missed on the balance sheet. Why is this a big problem? Well, if your bookkeeper doesn't know that you have those loans, first of all, it's going to throw off your financial documents. So if you go in to get a loan from the bank, they're not going to be accurate. So we got to get those accurate. But the second thing is, it meant that he was going to pay a lot more in taxes to the tune of thousands of dollars because he wouldn't have the write-offs for all of those loans. So when we caught that, we probably saved him about $10,000 in taxes because we had a mistake that we didn't see before. This is the power of you owning your financial outcomes as a business owner. All right, so let's get into it. What is a balance sheet? Simply put, a balance sheet is a snapshot in time that looks at everything you own in your business, everything you owe, and the gap or the difference between those two. So let's look at the 3 big pieces that are sitting on your balance sheet that you might not understand right now. And the easiest way to understand this is to think of it like a house. Imagine if you went and bought a $100,000 house. I know, wouldn't that be great if houses were that cheap nowadays? You bought a $100,000 house, and let's say you put $20,000 down on that house as the down payment. So you would need an $80,000 loan. If we were to look at a balance sheet of that house as a business, so to speak, then we would say that you own $20,000 of equity in that house, right? That's the equity section down at the bottom of your balance sheet. We would say that you own a $100,000 house. So first we would look at the assets column in your house. And we would say that the asset is a $100,000 house. So that would go up there because that is the stuff you own. You own that house. Next, under liabilities, or stuff you owe, we would see an $80,000 loan. Then under equity, we would see $20,000 that you own, which is the difference between the value of the house minus the liability or the part that you owe on it, right? So that's really all the balance sheet is showing. What do you own? What do you owe? And what's the difference between those? So now let's apply it to your business. First, let's look at stuff you own. The biggest thing should be at the very top, all of your actual bank accounts. So I want you to start looking through this and see, do all of my bank accounts look like they're listed on my balance sheet? Or are some of them missing? Or do I maybe have one of my personal accounts listed on the balance sheet, which I find all the time? You don't want to have personal accounts listed on your balance sheet, and you want to make sure that your bookkeeper has all of your bank accounts listed and that the values are accurate. There are some very common bookkeeping mistakes that happen where they might report a wrong number at the end of the tax year, but that wrong number in your bank account gets carried through for the rest of the history of your business until someone catches it. So if you look at your bank account right now on your balance sheet and you say, ooh, that is not what I had in the bank, it's not even close, you need to talk with your bookkeeper to make sure you can get that fixed. All right, next under assets, we're going to have anything else you own that might be something like a vehicle, a piece of equipment, or any other valuable asset in the business. Usually bookkeepers will say anything above about $2,000 in value may need to be listed on there. So even computers, furniture, other stuff you've bought that was expensive or more than $2,000 will likely need to show up there under assets. And then finally, if you keep some cash on hand, maybe you have a brick and mortar business, maybe it's a restaurant, and you need to keep cash in a till, they should be reporting that as well. So especially if you run a business like that, make sure that you're reporting accurate numbers. You probably need to be the one to tell your bookkeeper how much is in the drawer at the end of every month, because again, they can't read your mind. All right, so next let's look at liabilities. This is all the stuff you owe. First of all, the easiest one and what's usually up at the top is your credit cards. So again, I want to look and see, are all my business credit cards listed? And do the balances look accurate? Now this is one of the most confusing things about the balance sheet, because if you go look at your credit card statement and you compare it to the balance sheet, you'll see that those two numbers are probably different. This broke my brain forever until I just had to ask my bookkeeper, hey man, how are you getting to this number? Well, the bookkeeper is really smart. Remember, they're taking a snapshot in time, kind of like a picture of your financial status in your business. And so they're saying, well, let's pretend that the credit card bill comes due on the 15th of the month, and that's when you get your statement. And let's say the balance is $10,000. But then you make some other purchases on that card between the 15th of the month and the end of the month. Maybe now your true balance at the end of the month is $15,000. They need to accurately represent your business, so they're going to take that balance that was shown on your credit card statement and add in any new expenses and then subtract off any payments that you make along the way to show an accurate reflection of your balance at the end of the month. Isn't that cool? That's like half of what we pay a bookkeeper to do, and that's why it looks different than the statement versus your balance sheet. All right, so after credit cards, now we have stuff like loans. So you're going to look through, hey, are all my automobiles, are all my equipment loans on there? Are any of my hard money loans or payment processor loans listed on there? Again, your bookkeeper can't read your mind, so when you go get a new loan, you probably need to tell them. All right, so now we finally have this last section called equity. It is the most confusing one, and I'll just tell you, many bookkeepers have different ways of presenting the numbers down there, even with naming the different titles underneath equity. Here's the most important number and the one that really rattles people's cages. It's one that I like to call, how much have I gotten paid as an owner across the whole lifetime of my business? Now, that is a really wordy way to say something like owner's equity or shareholder distributions. And you need to know that that number is going to be negative because it represents money that has been taken out of the business, and it is a lifetime total of what you have taken out of the business. So I want you to look at that number on your balance sheet and see, is that within the ballpark of what I have maybe paid myself over the course of the years? And if it's not, you need to talk with your bookkeeper, because that is one place where they can kind of just stash a bunch of money that they're not sure where it went, and we need to make sure that that looks accurate. One other piece under equity that's important is net income. And the net income on your balance sheet resets every year, so it should exactly match your net income on your profit and loss statement. Okay, so go compare profit and loss statement versus balance sheet. The net income line on both of those should be exactly the same in the same month. And before we hit the last piece of equity, will you just hit the like button if you feel like, wow, I understand my books so much better after seeing this video. And the last piece under the equity section is something called retained earnings. It's supposed to be a representation of over the lifetime of your business, again, how much have you kept in the business? So you've paid yourself out some money as a shareholder through shareholder distributions. There might be some money sitting in there for net income, for profit so far for the year. And retained earnings is kind of a lump category of everything else that has been kept in the business. So you might go look at the retained earnings line on your balance sheet and see, does this maybe represent what I've actually kept in the business over the lifetime of it, or is it completely different? So I've got something really special for you if you want to go a level much deeper on your books. We call it the Better Books Workshop. And if you click the link below right now, you can download the entire workshop and the checklist that we use with our clients to make sure that their books are in order. You can pay attention specifically to the balance sheet section of that, but also what's going on at the P&L level, because they're both interconnected. Go download that workshop. It will be highly useful for you as you're getting a handle on your books. I hope this video has been useful. We're so grateful for your time. We'll see you in the next one.